Welcome to Tell Me More Stories Told as Podcast. Today, get ready for a bit of an expedition. We're diving into a territory that, well, it touches every single one of us. The honestly fascinating world of taxes.
Yeah, fascinating might not be the first word people think of, but it really is.
Exactly. Forget those dry rule books. Think of this more like we're unearthing a hidden map. We're going to reveal the surprising history, the often unseen purposes behind these mandatory contributions we all make, and even the debates that have raged about them for centuries.
Mm-hmm. And the material you shared gives us this really rich landscape to explore. Our job today is kind of like being your guides, pointing out the most compelling bits, the most insightful discoveries within it all.
Right. We want to shed some light on why this subject, which often feels, let's face it, a bit mundane, is actually this vibrant and constantly changing story.
Absolutely. It's woven into the fabric of society.
And speaking of ancient stories, did you know the earliest known tax system stretches way back? Like to ancient Egypt, around 3000 to 2800 BC.
It's incredible, isn't it? Nearly 5,000 years ago.
Just imagine the very first tax collectors.
Mm.
So, okay, let's grab our metaphorical shovels and start digging right there.
Okay, so digging into these origins, we find some really remarkable early forms. In ancient Egypt, for example, if you couldn't afford taxes and goods, you might end up doing corvée.
Corvée, what's that exactly?
It's essentially forced labor, obligated work for the state. And the pharaoh himself wasn't, detached from it all. He'd go on these biennial tours, partly to collect tithes.
Wow. So the ruler was directly involved.
Directly involved. And we even have actual physical evidence, these little granary receipts, believe it or not, written on limestone flakes and papyrus.
Seriously, like ancient tax returns.
Pretty much. Some of the earliest tax records we know of. It's kind of astonishing to think about.
It really is. And it wasn't just Egypt, right? I seem to remember something in biblical text.
You're right. Genesis chapter 47 mentions giving a fifth of the crop to Pharaoh. That's a clear example of an early agricultural tax.
A fifth. Okay. And moving eastward.
Well, you had the Hittite Empire. They also collected grain as tax. But what's really interesting there is that they stored it in these, huge, prominent silos.
Oh, why?
It wasn't just for food reserves. It was a deliberate display, showing off the ruler's wealth, the empire's strength, a very visual symbol of economic power.
Huh. Making a statement with your grain surplus.
Yeah.
Okay, fast forward a bit to the Persian Empire under Darius I. That sounds like it was maybe a bit more organized.
Oh, definitely more organized. Quite sophisticated for its time, actually. Darius set up the structured system, but crucially, it was customized for each province, each satrapy.
Satrapy, right, like a governor's region.
Exactly. So instead of just a flat tax everywhere, they assessed each region based on its actual productivity.
That makes sense.
Yeah, so for example, Babylon paid a huge amount, 1,000 silver talents plus food for the army. But India, known for gold, they paid in gold dust.
Wow.
And Egypt, the breadbasket, paid mainly in grain plus some silver. It really paints a picture of the ancient world's different economies.
It's like an economic map drawn with tax lines.
Yeah.
Now, you mentioned something earlier that caught my ear, the Rosetta Stone. I always thought that was purely about, cracking hieroglyphics.
That's the main story, absolutely. But, and this is the fun fact, the Rosetta Stone itself has a tax connection.
No way.
Yes. It's actually a decree issued by Ptolemy V back in 96 BC, and part of that decree included a tax concession.
Get out. So the key to unlocking an ancient language was also basically a tax break notice.
In a very real sense, yes. A hidden layer of history right there.
That is genuinely surprising.
Yeah.
Okay, so we've seen these early roots. What about the Romans? Their system must have had a huge impact.
Oh, enormous. In the Republic, they had a property tax, maybe 1% to 3%, but
Yeah.
it was collected by these publicani. Basically private tax collectors, tax farmers. They'd bid for the right to collect taxes in an area. It wasn't always popular.
I can imagine. Sounds open to abuse.
It could be. Later, under Emperor Augustus, it shifted, became more direct. There was a 1% wealth tax and a flat rate poll tax per adult.
So moving towards taxing individuals more directly.
Exactly. And that shift required regular censuses. They had to know who lived where, what they owned. It's sort of a precursor to modern demographic data collection, really.
All driven by the need to tax effectively. And elsewhere. India, maybe?
Yeah, much later, starting around the 11th century, Islamic rulers introduced specific taxes. There was zakat, for Muslims,
Okay.
and jizya, which was a tax, often a poll tax, on non-Muslims. So it shows how taxation could also be deeply tangled up with religious and social identity.
Right. It's clearly been fundamental to organized society for, well, millennia.
So let's shift gears a bit. Why do we actually have taxes? I mean, beyond just paying the government's bills.
That's the primary function, of course, raising revenue for government spending. Things like roads, schools, hospitals, defense, you name it.
The basics of keeping things running.
Right. But taxes are also tools. Governments use them to influence behavior. They can alter prices through taxes to affect demand for certain things.
Like cigarettes or alcohol, the sin taxes. Exactly like those. The idea is partly revenue, but also partly to discourage consumption. Taxes can also regulate costs or benefits associated with certain activities.
And then there's the whole welfare state side of things.
Absolutely vital. Funding social safety nets, public services, education, pensions, unemployment benefits, things that contribute to our quality of life.
It's like a collective pot we all chip into for shared benefits.
That's a good way to put it. And there's also a more maybe unconventional view, the Chartalist theory.
Chartalism. What's that?
It basically argues that in a system with government-issued currency, like dollars or euros, taxes aren't strictly needed for the government to spend. Instead, the obligation to pay taxes in that currency is what creates the demand for it in the first place.
Oh, okay. So taxes give the currency value.
Yeah.
That flips the usual idea around.
It does. It suggests taxes are fundamental to the currency system itself, not just a way to fund things. And underlying all this, whether you buy into chartalism or not, is the idea of fiscal capacity.
Fiscal capacity.
A government's actual ability to raise taxes effectively. When spending goes above what taxes bring in, well, that's when you get government debt.
Right. The balancing act. Okay, so we've covered the history, the why. Let's get into the what, the different kinds of taxes. This is where it can feel like a maze for most people, I think.
It really can. Let's try a quick tour. First up, income tax. Most people know this one.
Right, tax on what you earn, basically. Individuals, companies.
Exactly. Tax on net profits and gains. These systems can be progressive.
Meaning higher earners pay a bigger slice?
A bigger percentage, yes. Or they can be regressive, where lower earners end up paying a proportionally larger share of their income. And of course, you have deductions, allowances, things that reduce the taxable amount.
And that pay-as-you-earn thing, where it comes straight out of your paycheck.
Yeah, PAYE, a very common collection method. It often means you either get a refund at the end of the year, or sometimes you owe a bit more.
Okay. What about a negative income tax? That sounds like an oxymoron.
It does, but it's a real concept. It's basically government payments to people whose income falls below a certain line, a safety net.
Ah, okay. Got it. Then there's capital gains.
Yep. Tax on the profit you make from selling assets, stocks, bonds, real estate, that kind of thing. Often taxed at different, sometimes lower rates than regular income.
Right. And Social Security.
Those compulsory payments, usually deducted from wages, that fund retirement and healthcare systems, often split between employer and employee contributions. There's debate on whether it's forced saving or redistribution, but it's a major one.
Okay. Payroll taxes. Is that different?
Similar, but usually levied on the employer based on their total payroll. Often funds things like unemployment insurance.
Wow. Okay. Lots of ways to tax income and work. What about taxing what people own?
Right. Wealth tax is the big one there. A tax on your total net worth, your assets minus your debts. Controversial, often hard to implement, but it exists in some places.
And property taxes. That feels very common.
Very. Usually recurrent taxes on real estate land and buildings. That's the typical ad valorem property tax. But historically, property was taxed in stranger ways.
Like what?
Remember the window tax in England? Or the hearth tax in France?
Oh, yeah. People bricked up windows to avoid the tax, didn't they?
Did, leading to darker, less ventilated homes. It's a classic example of unintended consequences in tax policy. Shows how taxes can really shape behavior, even architecture.
That's wild. Any other property-related taxes?
Sure. There's land value tax, which only taxes the value of the land itself, not the buildings on it. Some argue that's more economically efficient.
Why is that?
Because the supply of land is fixed, so taxing it doesn't distort economic decisions in the same way taxing, say, building improvements might. Then you have personal property tax on movable stuff, cars, boats, sometimes even valuable art, though that's less common now.
Art? Even if it's just hanging in your house?
Historically, yes. There are even cases where art lent to museums could trigger tax. Then there's inheritance or estate taxes on property passed down when someone dies, and expatriation tax.
For people leaving the country.
Specifically for those renouncing citizenship or residency, often aimed at high net worth individuals trying to avoid future taxes. The U.S. has rules on this, and transfer taxes, like stamp duty, on transactions involving things like shares or land.
Okay, my head's spinning slightly. Let's move to taxes on things we buy, goods and services.
Right, another huge category. VAT value-added tax is massive globally, also called GST, goods and services tax, in places like Canada or Australia.
How does VAT actually work? It seems complicated.
The basic idea is that tax is applied at each step of the production and distribution chain where value is added, but businesses can usually claim back the VAT they paid on their inputs, so ultimately the final consumer bears the burden, but it's collected in stages.
Ah, okay. That's different from a simple sales tax.
Very different. A sales tax is usually just levied once at the final point of sale to the consumer. Much simpler in concept, maybe, but harder to administer thoroughly.
And there are debates about sales tax being unfair.
Yes, because lower-income households tend to spend a larger proportion of their income on consumption, so a flat sales tax can hit them harder proportionally. That's why many places exempt necessities like basic food or medicine.
Makes sense, and some places rely only on sales tax, right?
Some U.S. states do. Florida, Nevada, Texas are examples. Often states with big tourism industries where visitors contribute significantly to sales tax revenue. There was even a proposal in the U.S., kind of the fair tax, to replace federal income taxes with a national sales tax.
Wow, that would be a huge change. What about excise duties?
These are indirect taxes, usually on the manufacture or sale of specific goods. They go way back. England taxed beer and ale in the 1640s.
So not just sin taxes.
Often sin taxes, yes, alcohol, tobacco, but also used to influence behavior more broadly. Think carbon taxes on fuel or special duties on cars based on emissions, trying to nudge consumption patterns.
Okay. And finally, tariffs.
Or customs duties, taxes on goods crossing borders, usually designed to make imported goods more expensive, protecting domestic industries, though they can also just be for revenue. Of course, they lead to things like smuggling.
People trying to avoid the duty.
Exactly. False declarations, hidden goods. It's all tied up with international trade rules, trade blocs, customs unions. It gets complex.
It really is an incredibly diverse landscape of methods governments use. Before we dive into the economic effects, I just wanted to say if you're finding this journey through the world of taxes as intriguing as we are, please do hit that subscribe button on Tell Me More. That way you won't miss our future deep dives into all sorts of fascinating topics. Okay, so all these different taxes, they must have ripple effects through the economy, right?
Oh, absolutely. The most fundamental effect, obviously, is that transfer of wealth, of resources, from households and businesses to the government.
Okay, but beyond that, I remember reading Adam Smith had ideas about what makes a good tax.
He did, his famous canons of taxation. He argued taxes should be proportionate to ability to pay, they should be certain and not arbitrary, convenient for the taxpayer to pay, and importantly, cheap for the government to actually collect.
Those sound like pretty sensible guidelines, even today.
They still frame a lot of the debate. Another key concept is tax incidence.
Incidence, meaning who actually ends up paying.
Precisely. It's not always the person or company the tax is officially levied on. It depends heavily on market conditions, how sensitive buyers and sellers are to price changes. Economists call this elasticity.
So a tax on, say, coffee bean suppliers might actually get passed on to me when I buy my latte.
It could, yes. Or the supplier might have to absorb it, maybe by accepting lower profits or even paying their workers less. The burden gets shifted depending on who has less flexibility.
Okay, so taxes obviously take money out. But can they actually increase overall economic well-being? That seems counterintuitive.
It does, but yes. If the government uses the tax revenue to provide public goods and services, think clean air, national defense, maybe basic research whose value to society is greater than the cost imposed by the tax, then overall welfare can go up.
Ah, the benefits outweigh the costs.
Exactly. And then you have Pigovian taxes,
Pigovian.
named after economist Arthur Pigou. These are taxes specifically designed to correct for negative externalities, situations where an activity imposes costs on others who aren't directly involved.
Like pollution.
Pollution is a classic example. A carbon tax makes polluters pay for the environmental damage they cause. This can actually increase economic efficiency by aligning private costs with social costs. Plus, it raises revenue. Sin taxes can also fall into this category.
And what about inequality?
Progressive tax systems, where higher earners pay a higher percentage rate, are often designed with the goal of reducing economic inequality, redistributing wealth to some extent, though the actual impact is always debated.
Okay, so potential upsides. But there must be downsides too, economically speaking.
Definitely. The most obvious is the cost of compliance. Just the time and money individuals and businesses spend filling out forms, keeping records, maybe hiring accountants.
Yeah, tax season is not fun for that reason.
Exactly. Estimates suggest billions of hours are spent on this annually in large economies. Then there are what economists call deadweight costs, or deadweight losses.
Deadweight costs.
This is the reduction in overall economic efficiency that happens because taxes change behavior. They distort incentives. For example, an income tax might discourage someone from working extra hours, or a tax on savings might discourage investment. That lost economic activity is a deadweight cost.
So it's not just the tax money itself, but the economic activity that doesn't happen because of the tax.
Precisely. Some taxes are thought to have lower deadweight costs than others. Land value tax, as we mentioned, is one example because you can't change the amount of land available. Lump sum taxes, where everyone pays the same fixed amount regardless of behavior, also have low deadweight costs, but they're seen as very unfair.
Right, because they hit the poor hardest.
Exactly. And complexity itself creates problems. Complex tax codes can create perverse incentives, encouraging people to spend resources, finding loopholes, tax avoidance, or even breaking the law, tax evasion. Hiring tax advisors is a cost driven by complexity. Some argue simpler systems, like VAT compared to retail sales tax, can reduce these issues.
It really is a balancing act, isn't it? Trying to raise revenue efficiently and fairly without gumming up the economic works too much.
That's the perennial challenge, and it's often even more acute in developing countries.
How so? What are the specific challenges there?
Well, taxation in developing nations is really closely linked to what's called state capacity, the government's actual ability to function effectively, and also the level of financial development. Historically, a big driver for increasing tax capacity has often been war.
War. Really?
Yes. Major conflicts often force states to develop much more robust tax systems simply out of necessity. Think of the introduction of income tax in Britain and the US, often linked to wartime funding needs.
Wow. That's a stark connection.
It is. But beyond that, developing countries often face huge constraints. Yeah. Limited fiscal and legal capacity, large informal sectors of the economy that are just very hard to track and
For
tax.
example, working cash in hand, small unregistered businesses.
Exactly. Tax bases are often narrow, sometimes relying heavily on just a few large multinational corporations, which brings its own problems like transfer pricing.
Where companies shift profits internally to lower tax jurisdictions.
Precisely. Taxing multinationals and internationally mobile wealthy individuals is a global challenge, but especially tough with limited administrative resources. Often, investment incentives offered to attract companies don't really work that well and just erode the tax base further.
And the administration itself.
Often weak tax administrations, high compliance costs for the businesses that are in the formal system, coordination problems between different agencies, and unfortunately, corruption can play a significant role too, undermining the whole system.
What about foreign aid? Does that help or hinder tax collection?
The evidence there is actually pretty inconclusive. Some studies suggest aid might reduce the government's incentive to build its own tax capacity. Others find no effect or even a positive one. But generally, domestic tax revenue is and needs to be a much larger and more sustainable source of funding than official development assistance, ODA.
And we see big differences globally in how much tax is collected.
Huge differences. Tax revenue as a percentage of GDP varies widely. It's typically much higher in high-income countries than in low-income ones. There's also been a general trend away from reliance on trade taxes, like tariffs, towards more domestic consumption taxes, like VAT or sales tax.
Is it getting easier or harder to pay taxes in different regions?
The World Bank's Doing Business survey used to track this. It consistently showed that, relatively speaking, paying taxes was often easiest in places like the Middle East and hardest in sub-Saharan Africa, though many African nations have made significant reforms to simplify things. But fragility and conflict obviously have a huge negative impact on a country's ability to collect revenue.
It really underscores how fundamental a functioning tax system is for development. Okay, so we've covered history, purpose, types, economics. What about the views on taxation? People have strong feelings, don't they?
Oh, absolutely. Deeply held, often conflicting philosophical views. On one side, you have strong support for taxation. People see it as essential, the price we pay for a civilized society, as the saying goes.
Funding necessary things, beneficial activities.
Exactly. Roads, schools, healthcare, justice systems. Also, potentially reducing inequality. It's seen as a democratic decision, part of the social contract. Even within the support, you get different flavors. Conservatives might say an old tax is a good tax, favoring stability, while social democrats see robust taxation as key to funding extensive public services.
Even some libertarians accept some level of tax for basic functions, right?
Minimal taxation, yes, for core functions like defense and courts. And there are specific justifications, like businesses paying taxes because they benefit from public infrastructure. Then you have the Georgist view.
Georgism. That sounds familiar. Land value tax again.
Yes, Henry George advocated strongly for a single tax, primarily on the unimproved value of land, arguing that land value is created by the community, not the individual owner, so it's the most just source of public revenue.
Taxing unearned income from land.
That's the core idea. They generally oppose taxes on labor or capital and things like sales taxes or tariffs, seeing them as inefficient and unfair. It connects back to ideas about common resources.
Okay, so that's the pro-tax side, broadly. What about the opposition?
On the other end, you have views that see taxation fundamentally as theft or coercion, extortion by the state, a violation of individual property rights.
Strong words.
Very strong. This perspective is common among, say, objectivists, anarcho-capitalists, and certain strands of libertarianism. They argue that democratic consent doesn't override fundamental property rights. They often point to government inefficiency and waste as further reasons to oppose taxation.
And the time cost we mentioned.
Yes, the sheer burden of compliance is often cited. That estimate of 6.5 billion hours spent annually in the U.S. on tax prep is a powerful argument for them.
So fundamentally different ethical frameworks at play.
Absolutely.
Yeah.
And you have other perspectives, too. Classical Marxism, for instance, theoretically saw the state, and thus taxes, withering away under communism. Some socialist economies relied more on state ownership of production than on direct taxation. And there are ideas like tax choice,
What's that?
a theoretical model where taxpayers could have some say in how their individual tax contributions are allocated by the government.
That would be different. Imagine choosing where your tax dollars go.
It raises all sorts of interesting questions.
Okay, just briefly, any key economic theories about taxation we should touch on?
Well, the Laffer curve is probably the most famous or infamous.
Right, the idea that if tax rates get too high, revenue actually goes down.
Exactly. It plots the theoretical relationship between tax rates and the amount of tax revenue collected. It suggests there's an optimal rate that maximizes revenue, and beyond that point, higher rates discourage economic activity so much that total revenue falls.
Is it widely accepted?
The basic theoretical shape is generally accepted, but there's huge debate and uncertainty about where that revenue maximizing rate actually lies for any given tax. Then there's optimal tax theory.
Which tries to figure out the best way to tax.
Pretty much. It's a field of economics that tries to design tax systems that achieve desired goals, usually raising a certain amount of revenue with the least possible deadweight cost or distortion to the economy. Or alternatively, designing taxes to maximize some measure of social welfare. It gets very mathematical, involving things like the Ramsey problem or Mearley's optimal income tax model.
Sounds complex. And finally, tax rates themselves, marginal versus effective.
Yeah, that's a crucial distinction. Your marginal tax rate is the rate you pay on the next dollar you earn. It affects incentives to work or invest more. Your effective tax rate is the total tax you paid divided by your total income. It gives a better picture of your overall tax burden.
So you might be in a, say, 25% marginal bracket, but because of deductions and lower rates on your initial income, your actual effective rate might only be 15%.
Exactly. It's easy to confuse the two, but they measure different things and have different implications.
Well, you have certainly guided us through an incredibly rich and, dare I say, genuinely fascinating landscape. From those ancient Egyptian granary receipts all the way to complex modern theories like the Laffer curve. It's clear taxation is this thread running through all of human history, constantly evolving.
And it constantly shapes our societies in profound ways. Thinking back to that Rosetta Stone example, a tax break immortalized in stone, helping us unlock a language. History is full of those unexpected connections.
It really is. We sincerely hope this deep dive has given everyone listening some valuable new perspectives. Maybe spark some curiosity to look into the sources you shared or just think about taxes a little differently. What really stood out to you from our discussion today, or what questions does it leave you with?
Yeah, this is definitely just scratching the surface. It's a conversation starter. Maybe look into the specific mix of taxes in your own city or country, or read up on some of those tax revolts we only hinted at. They often tell you a lot about a society's breaking points.
Absolutely. And maybe here's a final thought to mull over. If that saying is true, if taxes really are the price we pay for civilization, then looking at how we structure our tax systems, what kind of civilization are we collectively choosing to build? Something to think about.
A very pertinent question. Thank you for joining us for this exploration on Tell Me More Stories Told as podcast. We look forward to our next deep dive together.